I want to follow up on Senator Shelby's questions, but also note that Senator Shelby was just as astute when Basel II was before the committee, and through his efforts and Senator Dodd's efforts, Basel II was not embraced as enthusiastically here as in Europe, and when the crisis came, we were a little bit better positioned, so thank you.
Big skeptics right here.
Well, you're a big skeptic. I'm a like half-size skeptic, but he's a very big skeptic. Let me ask you a basic question, Mr. Gibson, and that is, what legal obligation do we have to follow Basel III? It seems a very simple-minded question, but for the record, please.
We don't have any legal obligation. It's not a treaty, but the member countries of the Basel Committee agree that having a global level playing field is important, and holding banks in all the Basel Committee countries to high standards is important. And if we agree on what those standards are, we'll have an easier time doing that.
Okay. So that we can shape to a degree our response to the Basel III concept as you're doing right now, but also there is a sort of a quid pro quo. If we're not stringent and we're not thoughtful about it, then we can't expect the same process from other major financial countries.
That's right. We do tailor the Basel Committee agreements to our local U.S. circumstances, and we're allowed to do that within the boundaries that are set up by the Basel Committee.
One of the flaws with Basel II is that there was a great deal of reliance on internal risk models that banks are essentially grading themselves on their capital. Is that still prevalent in the Basel III proposals?
So the risk weighting scheme in Basel II is maintained in Basel III. The change that's coming in Basel III is higher quantity and quality of capital requirements. One thing that we are doing in the Basel Committee is we're doing a study across the Basel Committee countries of how the risk weights are actually put into practice, and that's one of the Basel Committee's major initiatives for 2012 and is currently being worked on. So we hope to learn from that process how each country is doing in terms of its banks implementing the standards in a consistent way, because, as you say, that is very important for the standards to work.
Indeed, but if one of the problems, which I think we mentioned with Basel II, was that banks there were categories, but they were the ones who essentially evaluating their capital status. The regulators, of course, come in and review that. Is that still prevalent in Basel III? Is that still going to be the case?
Yeah, though that aspect of Basel hasn't changed.
Thank you very much. And one of the other points that was made, and I'm just reinforcing again a point that Senator Shelby made, Mr. French, you talk about how, and Mr. Gilmore responded also about the importance of the leverage ratio as well as the risk asset ratio. And that's something that we have had in the United States, but this is a new aspect for Basel III for the whole community. Is that correct?
New in the Basel framework. We have had it in the U.S. since really since the early 80s, and then formally in the early 90s. But it's an important step for the Basel Committee. I think it reflects their recognition from the crisis that many of the models really did need some objective constraints underneath them.
And let me ask you another question, which comes to some of the comments I've heard, particularly from community banks, and that goes to, and you mentioned, Mr. French, that now, instead of being able to rely upon a rating by a credit rating agency, there has to be essentially an analysis by the institution of the creditworthiness of the value of the asset on the book or the liability. Is that one of the issues of complexity that is being raised by community banks?
To some extent, yes. There are certain aspects that have not changed, and in fact, important aspects. If a bank holds a treasury or an agency, agency mortgage-backed or whatever, it's going to keep doing what it's always done, use a 20% risk weight. If it does have a private label mortgage-backed or structured type of product, it's going to have to feed in the sort of the structure of the securitization and apply a formula that would set capital based on the seniority of the tranche. So there is some concern about that. I would say, however, that a number of the servicer reports and vendors are starting to put out information that the banks can apply that pretty easily.
Thank you very much.